Welcome to the Raisina Ideas Pod. My name's Professor Johanna Weaver, and I am delighted to be here moderating this panel on the next 6 billion, fanning the FinTech revolution. And I have two absolutely extraordinary guests with me today. We're going to have a really interesting conversation. It is, for everyone watching, 8:45 on the third day of the conference. So I think actually a round of applause to both of you for showing up. So we have Penny Burtt, who is the head of public policy and engagement at Stripe Singapore, and also through the Asia Pacific. Thank you so much for being here. And we also have Tidhar Wald, who is the deputy managing director of Better Cash Alliance, at the United Nations. So we're here to talk about the fanning the FinTech revolution. We thought we'd start with a really obvious question, which is, why do we actually need to have a FinTech revolution? What's wrong with cash?
So cash itself is not the problem. The problem is when you only have cash. When you only have cash, it means that you get your salary in cash. It means you have to actually stand in line for hours or for even half a day to get paid. It means you have to take a bus. If you're entitled to get some kind of a government entitlement, you have to take a bus, maybe two buses, to be paid. It means that you have to take a bus or stand in line to pay your rent, to pay your electricity bills. And so it's inefficient, it takes time, and it's not secure. Think about a government facility in a country like Bangladesh. Think about the fact that 60% of government employees are women. And if everyone knows that there would be 300 women walking outside of a government facility on a Wednesday, all of them carrying cash, that's a security issue as well. Yeah. So it's insecure, it's inefficient, it's costly, and it takes time. That's why cash is an issue when you can only have cash.
Yeah, look, actually, that brings back memories for me. So I did a posting in West Africa probably about 15 years ago, and we paid our local staff in cash. And we actually had a driver who would go once a month to the bank and come back with a briefcase full of cash. It reminds me of that. Penny, can you talk a little bit about the opportunities that flow from digitization, from actually moving away from a cash infrastructure into one that's supported by digital payments?
So at its most basic, digital payments and economic infrastructure online, so digital economic infrastructure, connects people to opportunity, and in so many different ways. But at its very base, digital payments allows for the creation of data records. And we forget, we take it for granted that with cash, at the end of the day, you have a cash transaction, it goes away. In the case of digital payments, with or without, quite frankly, a formal bank account, you suddenly create information. You create a digital trail of data which will enable judgments to be made about your business, your creditworthiness, your capacity, and that is transformational. It's transformational for the individual, it's transformational for business. I think beyond that, if I just speak through the business lens for a minute, digital payments effectively connects business of all sizes, from micro businesses to SMEs to the largest businesses in the world, to consumers, and to other merchants in whole new ways. So in effect, digital overcomes some of the rural regional divides. It actually allows for scaling within and beyond borders in ways that haven't been possible till now.
And we're coming up to International Women's Day, could you maybe speak a little bit about the impact on women, particularly when women become a banked element of the population?
I'm very happy to speak about that. So is Tidhar. I think one of the interesting things, of course, is that women have been systematically less banked, had less opportunity for financial inclusion in the past, and actually less opportunity for digital inclusion than their male counterparts. But what we have seen with digital banking is the inclusion of women, particularly women micro-entrepreneurs and women-owned SMEs, has produced, one, much higher levels of employability for women. Number two, higher levels of economic empowerment in many, many ways. So women being able to get access for the first time to capital sources, to expand their business, women being able to get access to opportunities for digital education, skills building.
Yeah.
So I'll just stop there and say, Tidhar, what have you seen in terms of the growth?
I mean, all the data shows that when you put money into women's hands, everyone benefits from it. And what's interesting is this is across cultures. Whether we were talking about Asia, Europe, Africa, US, when you put money into women's hands, the investment of the household in education will go up, the investment of the household in food will go up, there's better nutrition for the family. Women just tend to be more responsible when talking about finance. And that's across cultures. Women are in that sense the same, and men are the same across cultures.
And so we're here in India, and we've obviously been hearing a lot in the conference at Raisina about UPI, Universal Payments Infrastructure. Can you maybe give a few examples of countries that have successfully digitized their payment system and the impact that that's had on their productivity and GDP growth?
Yeah. So Colombia is a great example. During COVID, when they announced that the entire population had to stay home, suddenly they realized that there was a big group of particularly women who were informal workers. And if you're an informal worker, that means if you don't go out of the house because you are under COVID restrictions, you're not going to earn your money.
Yeah.
And so in just a matter of few days, they decided they were able to register women on mobile accounts and then transfer social welfare payments. And now what's incredible is that has been such a success, and they decided to extend it beyond COVID. India, the country we're in right now, is another great example where they've provided 99% of a population of 1.4 billion with digital ID.
Yep.
Then they had a massive campaign of opening almost 500 million bank accounts in 5 years. They call it the PMJDY scheme. And then they start transferring social welfare payments through those accounts. So it's the digital ID is linked to your mobile phone, and then it's linked to your bank account. And for instance, when COVID happened, India was able to transfer payments to 500 million people. 500 million people
the number
within
is
a click.
Extraordinary. Yeah.
While you had actually some OECD countries, so some developed economies, were scrambling, finding registries and who do I need to pay. And there were some even OECD countries that were paying people with checks. And in India, which is an emerging economy, as we know, it was all done digitally and seamless.
And one of the most amazing stats that I've heard about the Indian transformation, and particularly the 500,000 people coming online in that 5-year period, is that the stat I've heard is over the 9-year period that the International Bank of Settlements has estimated that would have taken 45 years to do the same level of productivity growth that happened as a result of a banked population. So you can really see why particularly countries in the global south are really focused on this and are looking at how can we mimic and bring on board digital payments, which I guess, Penny, goes to my next question, which is really around the infrastructure and the regulatory systems we need to put around this. But also we've heard, pretty consistently messages that the reason India was able to make that transformation so quickly was because they had a prime minister who was really pushing and wanted this reform. So how do you see all of those different elements coming together, the regulatory frameworks, the political side, working with industry and connecting all of those pieces together?
I think it's a really powerful point that you've got to have that political impetus and strong political will. I mean, India, the very controversial at the time decision to proceed with demonetization actually was the first genesis, then followed by COVID, for that incredibly rapid digitization of payments. And what we've seen all the way across the Asia Pacific is governments leaning in and committing to digital transformation of business, lowering the cost of payments by adopting digital technologies, and then stepping in to create both the hard infrastructure, soft infrastructure, new payment schemes, whether it's Prompt Pay in Thailand, Pay Now in Singapore, Indonesia, which has now got its BiFAST system, all designed to reduce the cost of payments, to increase the ease of payments using digital tools, to foster financial inclusion through these new low-cost platforms. So political will, absolutely essential, and has allowed for an incredible acceleration in the use of digital payments in fintech. Mm-hmm. The second thing I think that's really important about enabling the fintech sector and digital payments for inclusion has been the willingness of government to try and create the right policy and regulatory environment that supports both the rapid evolution of technology, but crucially, to your point, the participation of the private sector in this sector. So some great examples that we can see, for example, here in India, is where the government is providing digital public infrastructure and then inviting the private sector to come in over the top of the rails to develop applications that are consumer-friendly, business-friendly, and that in effect take the opportunity of these great new digital rails and then transform it into something that provides whole new levels of access and experience.
That's a really good point. And, at Better Than Cash Alliance, what we do is we provide technical advice and we help governments make the transition from cash to digital payments or digital financial services happen. And lots of their question is, how do I make sure it's a success? And to Penny's point, you will make sure it's a success if payments are done in a responsible manner. It means that I, as a user, know what I sign up for. I, as a user, know that if something happened and I wanted to send you payment, but actually I sent it to Penny, I can retrieve that payment and send it back to you. It's not going to be complicated. There's going to be a hotline that I can call. So there are going to be recourse mechanisms that are going to work. And most importantly, that my data, my privacy is going to be protected. And that's really, really important for women, all women, obviously, but particularly when you think about emerging economies and societies where women might not necessarily be able to go to a bank, but if they know that they can transact and make payments from the privacy of their home and they know that their privacy is protected and that they control the money that they know they sign up for, that's the moment where you will really get picked up by women for digital financial services.
And I think, obviously, I'm biased on this point because I'm the director of the Tech Policy Design Centre and we're focused on regulatory frameworks. But that concept of needing to have security and privacy protected is a really important point in terms of having people feel comfortable with using the infrastructure that then leads to its success, that then leads to the increased productivity. Sorry, Penny, I thought you were going to jump in there as well.
No, that's an incredibly important point. We need data protection, privacy, and security to create trust in the system and resilience, which is absolutely vital. At the same time, speaking from the private sector perspective, we also need policy and regulation that creates enough room for innovation.
Yeah.
And that's why government and the private sector really need to have a very open set of conversations to ensure that as policy and regulation evolves, you can actually take into account all the needs across the ecosystem and constantly balance in a way that, protects and promotes simultaneously. Yeah. And that's a really important role that institutes like yours play in fostering that collaboration and those dialogues.
Yeah. All right, I'm going to wrap this up with one final question to you both, and it's a question with no notice, so I'm putting you on the spot. If you were to move forward in a 5-year horizon, what's one change you think we need to be making now in order to be setting up the Global South? Or I heard statistics earlier on the panel before saying that there's 1.4 billion people still in the world without a bank account. So what is the one substantial change that you would like to see implemented now? Tidhar, I'll go to you first with that question.
Well, there are different models, obviously, and some of the people here said there's not a cut and paste model.
Yeah.
I think India does show an interesting example with the idea that you invest in digital public infrastructure and then you let private sector, you basically open the marketplace and say, we've created the rails, now you sell us cars. And, one company can sell a red car and another company can sell a blue car, but ultimately there's a level playing field.
Yeah.
The second thing is that you need to have regulatory policy that enable interoperability. Yeah. That's something you don't have in so many countries yet. And I think that's, these two complement each other.
Yeah. So building the road and building the rails and then the rules for the road as well. Penny, for you?
I think picking up, we've had excellent acceleration in infrastructure, as you've just said, but for the next 5 years to actually move forward, it's those rules of the road. We really need to focus on better harmonization of policies across countries, across jurisdictions. The reality is, and reflecting on the whole evolution of trade rules, in the old days, we have rules of the road for trade in goods and trade in services, but we still actually have competing regimes, national, regional, and global, for the entire internet economy. Yeah. And I think, honestly, to realize the full potential, we need to step back and have a moment, as we did in global trade in goods and services, where we come together and recognize that we are all best served, quite frankly, through creating regimes that will allow for free, fair, and open trade in the digital economy in the same way as we did in the old economy. And to do that, I think we need to reconceptualize in many countries our notions around data sovereignty, protection, digital trade, and that's going to be a tough set of discussions. But without that, we might actually be on the road to further fragmentation of the digital commons, which will undermine the prospect for digital and financial inclusion for the next billions.
Yeah. So it's not just about having the next 6 billion to be banked. It's also about having the interconnectivity of that infrastructure. Thank you so much for coming in today, Tidhar and Penny. Really appreciate it. And thank you very much to ORF and Raisina Dialogue for having us.